Good day, traders. Forex Funnel here. Welcome, guys. Welcome, traders. In today's video, I'm gonna show you guys how to trade support and resistance levels. I'll be telling you guys what support and resistance is. I will be showing you how you can identify these levels and how you can use these levels to trade or have opportunity trades to place from. So it's important that you guys write this down and create a journal for you guys, because it's important that you guys have a journal that you guys can reflect back to, especially because there is a lot to learn and there's a lot to know when it comes to Forex trading in general. There's a lot of different strategies, different terminologies people use to trade to their advantage, and I do not use everything that I've learned, but everything that I have learned has made me a better trader. I have been trading for over a year now, but I spent most of my time trying to better my skill, trying to figure out what works for me, what the market actually does, what it requires to move price, fundamental data, technical analysis, all of that, guys. It's all important that you guys have a process and you guys have a strategy that works for you guys, and you guys should not just jump around to different strategies, because in the end you will not know if that strategy was going to be making you money based off 100 trades. So let's take for an example, you have a strategy and you backtest the strategy 100 times, and out of that 100 times you win 63% of your trades. So that means you will be making money more than half the time based off their strategy. So it's important you guys actually have some statistics, some numbers going for you when it comes to your strategy. Second of all is that support and resistance, they are two major concepts used very differently. Like, I'll give you an example. So when we use support, we look at areas where price has gained buying momentum and push price in an upwards direction. That can also be the same for a demand zone, where price is most likely and certainly gonna find support. So we also look at the frequency of touches, how many times relevance of price, and even back in the past, how many times this area been tested, because it is a valid area. The same thing for resistance. It's just the opposite. You look for areas where price has failed to break through, where price has hit an area or come back to that area and it kept coming back down. Those would be major areas of support, which also I would call it a supply zone, areas where price failed to break through, and every time it goes to that area it fails to break through and it comes back down. Sometimes you can get faked out. That is why it's important to wait for price to give you a signal whether the market is changing direction or there's a reversal about to happen. So the next thing is that just supports of resistance, and that means in a trending market we are going to have support become resistance and resistance become support. This is all dependent on which type of trend you are in and which type of market you are in. If you're in an uptrend market, you are going to be resistance will most likely become support, because price will be making higher highs and higher lows, and the higher low is your pullback, temporary pullback for price to create structure. And once price has found support from that higher low, it's most likely going to break through that level of resistance, and that level of resistance will become support. So let me show you on the chart, or let me just draw up an example for you guys. So this is an uptrend market, and we can see this price is making higher highs and higher lows. So every time price makes a higher high and price pulls back, it's most likely that price will break this area, form a new high according to structure and trend, and price pulling back into this area, which is the pullback, which is also the higher low. But this higher low is formed where this price has previously found resistance, but now is being retested for support. So that's what I mean when these two concepts are reciprocals of one another. And it's the same thing for a downtrend market. We have price making lower lows and lower highs, and every low becomes resistance because price first found support, and once price has broken the support, price then pulls back into this area, forming the lower high, which is also the pullback, and is also a retest of this area of support that has become resistance. This only happens in trending markets when you have a downtrend or you have an uptrend. Alright, what is support? Support is an area which has proven, even in the past, where price is most likely to gain buying momentum. It is where traders are willing, or sellers are willing to place buys. It's areas that push the market in an upwards direction. So it's very simple. Areas of support are areas where price is most likely to bounce off and gain buying momentum. For resistance is exactly the opposite. For resistance, we have areas where price have failed to break through, and in those areas we are seeing rejection from the market, and we want price to be heading downwards. That's the main function of this area. It's areas even in the past that have proven that price is most likely to bounce in a downwards direction. This can be seen on the chart, it can be seen in trend as well. So I will show you a couple of examples right now on what support and resistance looks like and how to identify these levels. So that's the next thing, how to identify these levels. So how to identify support. So support is based on, I don't want to give sides to the chart, but support is always based at the bottom of the chart. It's the bottom area of a chart where price has found, like I said, buying momentum. It is areas where price has touched and has rejected, and hence the buying momentum coming in. It is also used as a demand zone. It depends on how these levels push the market around. So when you draw up a support level, you want to make sure that it has been tested multiple times, even in the past. And same thing for resistance. You want to go back in the past as well as relevance to price to make sure that these are valid areas that is most likely going to make the price reject this area and moving price in a downwards direction. So how can we use these areas to our advantage? Well, there are ways that we can use these areas using chart patterns and candlestick patterns. So at areas of support or demand zones, we are looking at 3 different types of entries. We look for a green candle, and we want this candle to be medium to large, or just any green candle that signifies buying momentum coming in. We can also look at double bottoms at this area, as well as a hammer stick candle. These are all reversal chart patterns that signals price reversing. So that's important to know how to enter a trade at these levels. At the area of resistance, we are looking at the same 3, but it's reversed now. We are looking at a shooting star, we are looking at a double top, and we are looking for a red candle, any form of selling momentum coming in. So that's how we use these areas to trade. So let's go get into the market and let's draw up some support levels. So I will show you exactly how to draw up support levels and how we can use them. So right here, as we can see, that this area right here is a strong level of support. Why? Because this area has been tested multiple times, even here. So if we have to draw a horizontal line at this area, We can even go back in time to see that this area was used for support right there. It was used for support right there. And I'm going to explain the reciprocal concept just now. I just want to get through the support and resistance. As we can see that this is a strong area of support because this area has made the market bounce up not once, not twice, not 3 times, not 4 times, 5, but 6 times. But if you go back in the past, or you go further forward, because we are quite back in the market right now, you will find that this area is a strong area of support, as we can see based off the touches and the bounces. So our entry will be based off is either a double bottom, as we can see right here. This is a double bottom, the first bottom on the left, your second bottom on the right. So we can either enter based off this candle's chart pattern, or we can have entered based off this large green candle, or even if you missed that entry, we could have entered around about this green candle right here. As we can see that this area in fact did push the market all the way up here, right where it is currently at right now. So as we can see, this area of support is a strong area of support because it has pushed the market around in dramatic ways, even breaking this consolidation and this downtrend. We can see it does reverse the market all the way up there. So when it comes to resistance, it's the opposite. We have a level right here of resistance. As we can see, we have an area of resistance. And at this area of resistance, we can see that price has, every time price pulled into this area, it found rejection and it just fell. It came up and it fell, it came up, it fell, came up again, it fell. And eventually this area of resistance will become support right after this reversal chart pattern right here, which is called a double bottom. A double bottom, your entry would have been the first green candle after the second contact, after contact with the box. And I normally have a 1.4 to 1 risk reward ratio. So that would have been a trade. You would have played out a beautiful trade right here, but we can see that this area of support has pushed the market all the way, even above this area of resistance. But for now, let's just focus on the resistance side. Resistance is based on price failing to break through a certain level, and price always finds rejection from this level. So that is resistance. When it comes to support and resistance and them being reciprocals of one another, this is what I mean. I mean that when resistance is broken, like here on the chart, when resistance is broken, it's most likely to become support. That's the reciprocal of support, is that it will become resistance. For example, you can see that this area right here has become support because of this reversal and of this area of support right here. Price, this was a really strong area of support that pushed price all the way to break this level, to overcome this level of resistance. So as we can see that this is an example of a trending market where price is using each resistance level as support once price has broken that level of resistance. So that is what I mean when it comes to a trending market. We have price doing something like this, breaking into new highs. So this was an area of resistance. That is why price got pulled back, and then price went back to this area, broke through it, retested, found support, and then price pushed away again. Just like over here, we have price doing the same thing, finding resistance a little bit, then breaking through that area of resistance, coming back down for the retest, and then pushing off to form a new high. So that is what I mean by a continuous trend trade, and that is how you would use the reciprocals, and how support becomes resistance and how resistance becomes support. So I'm gonna look for an example based on a downtrend. Come on. Okay, here we go. As we can see, the market is in a downtrend right here, and we can see that every time price broke into new lows, this area of support has become resistance right here, and we had price pulling all the way above this level, but then coming back down into this area again so that it can find resistance. Let me just find a proper example for you guys, because I need a trending market. Well, it's really hard to find a downtrend market. There we go. There's a little bit over here. So we had price making lower lows and lower highs. So this was the low before price pulled a little bit up before it broke this level. So as we can see, that this level was support, temporary support, but once price broke this level and was pulled back into this area for a retest, we can see that this area has become resistance instead of support. Then we had price breaking this level as well, coming back up for the retest, which was support and then resistance. Price found resistance and with this huge rejection candle, and price coming down. So that is what I mean when price is in a trend and these areas are becoming reciprocals as they function. So it depends on what type of market you're in and the trend you are in. So that is it for today, guys. I won't still keep you guys long, but that's it. If you guys have questions, just let me know. Please like the video, and I will most likely try to improve on my videos and my knowledge to help you guys to better your trading and improve on your knowledge. But I do suggest that you guys get a journal, because I have a journal. It's filled with a lot of strategies, a lot of things, a lot of notes, a lot of things that I use for trades, and it just helped me become a better trader, knowing that I have this book and all these things I write down. It makes sense, and it's important you guys keep a journal, and also make sure that you guys keep practicing, even opening up demo accounts, practicing your strategies, or practicing a strategy, trying to get a hang of things. That's all gonna help at the end, guys, because if you don't, it's okay to have the education, but it's not okay if you do not have the experience. So if you want cash and you want excess cash, you need to be able to have the education first, then have the experience, and then the cash will come. You can't have just education and then you expect to have cash, or you just have experience and then you have to have the two to make the one, you know. So that's all for today. Thank you very much. It's Forex Fan over here.